Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, June the 22nd. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. This is going to take about 20 to 25 minutes. If you're watching this on the video and you want to skip ahead to the hypos, they're usually around 15 to 17 minutes in, but everything else to me is important context leading up to show you how I'm coming up with the levels and the hypos. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to. Then we do live trading and analysis during the course of the trading day for our regular members. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results in any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Taking a look at yesterday. Yesterday, our main hypothesis was an open auction in range, outside of value, a move up to test the value area, and somewhere between the 71 and the 75, we were looking for responsive sellers to rotate us down into the overnight low, and somewhere between the 62 and the 59, we were looking for buyers to step in and start rotating us back up towards the 70 and closing up there. That was hypo 1. Hypo 2 was the opposite of that, but with continuation up into the 75 area and closing sideways at the 75. Hypo 3 was a move higher up into the overnight high into the 80 after finding buyers down here. What we actually got was hypo 4. Hypo 4 was an open auction, failure to close the gap somewhere around 70, finding sellers quickly rotating down into the overnight low, going sideways between the 62 and the 59, and then pushing lower into the 2750 with possible probe down to test the key line in the sand at the 4550, and that's basically what we get. We didn't quite get to the 4550, and then we rotated back up and closed lower down at 2752 area. If you take a look at the overnight, you can see that we've been in a very grindy trend up all night long, and we've come right back up into the tail end of this B-shaped profile. And we could get stuck here today in this tail as we re-auction this territory. You can see we went from a B shape to a P shape. We do have a somewhat of a weak high right now on the high overnight, but don't forget we've also got a weak low down here, and the overall composite is showing some weakness, but it's showing a lot of range back and forth as well. But we'll get into that a little more in depth. Taking a look at the economic calendar today, again, this trading has really been driven by all the tariff news and this pissing match that Trump is getting in. We did have Canadian CPI came out. It was a slight miss on the Canadian CPI, but nothing really spectacular, and didn't really do much to the market. In 54 minutes, we've got the manufacturing PMI and the market composite PMI and the services PMI. 10:30, we've got the ECR weekly annualized, but that's not really a big mover. We do have the OPEC meeting today at some point in time, and that could be a driver for oil. we've got the rig count as well, the Baker Hughes. And then later in the afternoon, we got the CFTC, copper speculative, oil speculative, gold speculative, and the S&P speculative and the silver speculative. So not a lot of driving news today, but to me, it's all going to be whether or not it's going to be risk on or risk off going into the weekend. So this is where I lose a lot of guests usually because what I do is I like to start my day with a simple candlestick chart. I start with the monthly and work my way down. I use a 9 EMA, 20 SMA. The exercise here is to simply take a look at where we are, how strong is the trend on each periodicity, and do we have good slope, good separation? Is price paralleling the 9 nicely? Or are we challenging the trend with the test of the 9? Or are we violating the trend with a break of the 9 and the 20? You can see very strong trend up on the monthly. We come down and we test it for the last 4 months, but we failed to break below the 9. And then we're getting this continuation pattern. And we don't even begin, and this is important why we do it, we don't even begin to test the trend until we get into the 2600s on the larger time frame. So pullbacks right now is not the market rolling over. It's just normal on the larger time frame trend. On the weekly, it looked like we were going to get a bit of a rollover and a start of a possible trend down, but they took it back, and every test is being met with buyers, and we're holding the 9. We've got some separation. We don't have a lot of slope right now, so we're in this consolidation area after the breakout of the microcomposite value area that we broke out above 45.50. Still holding the trend. A key area is going to be the 45 to 31 area to watch for a possible trend change on the weekly. And again, that's just on the weekly. On the daily, you can see that we're back into consolidation again, another symmetrical triangle. You see we keep stair stepping, and right now when we closed below the 9 and the 20 yesterday, and here we are trying to take it back, and we're trying to get above the 9. Pay attention to the 27.60.75 today if we break it on the daily. There's a couple key levels down there we'll talk about when I get to the composite. Going to the 4 hour, the intraday, you can see that we've basically, yesterday we put in the move down, and it created a FUBAR Mr. Sneaky technical gap on the 4 hour. And what do? We rotate up, close that technical gap, and now we've got continuation, and we're trying to get above the 9 and the 20 right now. The 9 is still trailing the 20, so this is going to be a decision area here as well. And then just going to the 30-minute, you can see that on the 30-minute, we basically, once we got back above the 9 and the 20, we've had a nice trend. We've held the 9, and we've got good slope and separation to the upside, so the trend is up. Taking a look at the structure of the market, and again, just to give some context, we broke out of this this value area, this very large value area that we've been chopping around for most of the quarter, and we had a double distribution. The microcomposite VPOC was down here in the 69 area, and then it jumped up into the 22. The smaller time frame, microcomposite, its microcomposite VPOC shifted up as well. So we got price acceptance, and then we break out of the longer term value. And so far what has happened, we have the 2-day balance, price acceptance above value on the breakout. Then we move up, we consolidate right here around the 71. We move higher, we test the 96. We failed getting back into the 2800s again, and we tried to hold value at the 88.75, and then we we take a trip back down, and you notice that this trip down, all 3 days on the way down have been green days, and it's kind of a weird pattern because they took it down on the Globex, and then each day they took it back in the RTH. Well, that pattern is flipped. In the last 2 days, they've taken it up in the Globex, and they've been taking it down in the RTH. This is a weak looking profile. We had the VPOC shift from the 88 75 area down to the 75 and we failed to come back up and hold above the microcomposite VPOC. Yesterday we took a big trip down, okay, tested back down into the area where we first accepted price on the breakout, and closed rather weak. We closed around the 52 area, but what do in the Globex? They take it all back. So the question will be, okay, do we hold in the upper distribution of the B-shaped profile from yesterday, or do we break below 60, come back down towards the 50 and 55 area? And if we don't hold here, then I think this is going to get the sellers aggressive. We will be below the weekly critical mass, and I think we could get a liquidation into the value area and break this 45 and come back down between the 32 and the 22. So just an interesting pattern to pay attention to, that they flipped, okay, in terms of participation in the Globex and the RTH, and it's flipped right over. But the key to me is we failed to hold value after the microcomposite VPOC shifted down. So taking a look at the overnight inventory is pretty much net long in price and time. It's a fairly decent volume, not quite the double we've been seeing, but you can see that we have had some OTF participation in the Globex, which we've been seeing, and we've created this weak high. VPOC did shift up from the 58 area up into the 65 area, and we currently have a overnight high at 68.25 with the VPOC, and we should be trying to hold this level. And we're likely to see some chop this morning in the thin area of the B profile that we saw yesterday. What we don't want to see is a breakthrough that 60 area again, because then that will probably embolden the sellers. So taking a look at our levels. One thing I wanted to also point out, you can see that this whole way up, we have had these zipper measured moves. So zipper measured move, 5.25 point minimum with a minimum of 3 Renko bars, green, red, green on the way up, opposite on the way down. So we have this zipper measured move here, and then we grind, zipper measured move here, okay, another zipper measured move here, and then another zipper measured move here. So they are grinding this. We currently have a zipper measured move primary target to 69, which will remain valid until we get back below that 61. So just keep that in mind, that we've seen quite a few zippers to the upside, and you can see that the Keltner upper channel, we've been walking it up all night long, and from basically once we came off that low, and from yesterday at 47 and made a higher low. So moving our numbers over, our current overnight high, and again this could change, is 68.25. Our current overnight low is 49.25. Our 20-period daily ATR is running at 27.16. So off of the low overnight, our daily upside ATR target is 77. off of the high overnight. Our daily ATR target is down here at 41. So that gives us range capabilities of getting back inside of the the micro composite value area that has the high at 45.50 in our key line in the sand, or we could take this back and get back up towards that 27.75 area, our current micro composite. Our week open and our key line in the sand is going to be the 27.80. Above that, then we're likely to get the continuation back up into the 88 where the microcomposite VPOC was, and hopefully we get back up there, accept this price, get the microcomposite VPOC, shift back up here, and then get the move into the 2800s again. Our week open at 27.80 gives us a weekly critical mass of 51.75. So what does that mean? Is we do not want to go into the afternoon below the 51.75, because then it becomes very low probability that we'll get above the week open and we'll end up with a bearish week, and the buyers could capitulate and we could get a liquidation break and get that move down into the prior value area. So critical mass is there. Our current VPOC is not likely to shift. The overnight VPOC is 65.50. So I would be looking for a move on the open to test the 65.50. We are going to open up in range but out of value. So in terms of hypotheses, again, because of this two-sided action that we're seeing, I'm looking for hypo 1 and hypo 2. And just a quick word of note, I'm not trying to cover all the bases with the hypos. The hypos are basically our trade plan based on who takes control of the market. We do not know what the market's going to do. Therefore, we have to have a plan created based on the situation that the market shows us and who takes control. So hypo 1 and hypo 2 are basically waiting to see who takes control of the auction, and then we execute the plan that best suits the need, best suits the market. Hypo 3 and hypo 4 are our expansion hypos, recognizing where we're going into range expansion, or a real shift of control between the buyers and sellers. So hypo 1 and hypo 2, again, because of the situation, have to be equally weighted. I don't put one over the other. I can easily have my hypo 2 as my hypo 1, but because of the current context of the structure and what we've been seeing, my bias is on the short time frame. Okay, another move down, but the overall trend is up, and a move down is only natural. It's only a pullback. So, open auction, hypo 1, open auction, in range, out of value, a push up, take out the 71 and the 71.75, the naked VPOC and the naked close, and then have a false breakout. Sellers step in again, same as yesterday, rotate us down through to test the value area, chop in between the 60 and the 56, and then push down to take out the naked close and the naked VPOC. So basically taking out both the two gaps that we left yesterday and are leaving today, and then basically chopping in this area and going sideways into the close. That is hypo 1. Hypo 2 is a open auction in range, a push down into the value area, and then somewhere between the 60 area and the 53 area, finding buyers, rotating us up through to the 71. It's almost like a mirror image to each other, and then pushing up into the 75 and going sideways. Almost identical to yesterday. Hypo 3 is going to be basically the same as yesterday as well. Open auction in range, failure to get inside of the value area, buyers take control early, pushes up into the 71, chop, fight this open, push up into the 75, chop here, and then push up and try to close, okay, above 80, somewhere between 80 and 88.75 with a late day probe up into closing this gap and this naked VPOC. And then hypo 4 that we have to put some weight to would be an open auction in range, false breakout, sellers take control early, take us down into the value area, take a trip through value down into the critical mass, take out the overnight low, and then get a liquidation break and push us down, all the way down into this 41 to 36 and a quarter. So just remember it's Friday. You know, the last thing you want to do is you've got a good week going, you know, to get in a bad position and give away your profits for the week, or go into the weekend with a loss and have to suffer through it until, you know, Sunday open or Monday morning if you don't trade the Globex. In terms of gold, gold continues to show weakness. We did not get back up to the 76, and we've pushed through that 73. We said if we didn't hold that 73, we were likely to come down into the 65. Now we've got a 2-day. Do it this way. We have a 2-day balance right here of 70. That's our over underline today. Above 70, look for them to push up into the 73 to 76 area. But we're more likely, if we still see you know, a shift from gold right now, we're more likely to continue the auction down and come down and test the lower area down here in the 55 to 51 area. So key areas to pay attention to is going to be this 69 to 70. Below it, the first target is down to 65.60, and more likely down to the 55.50 if they get some acceleration into the afternoon. If we can hold this, come up and hold above the 70, then looking for a move back up into the 73 to 75. I'm not expecting a big move in gold to the upside. It's whether or not they liquidate and we get the bigger push down towards that 55 to 50 area. So let's get complete our pre-market session. As always, trade well, trade safe, and I'll catch you on the flip side.